If you live in New York, you've probably received one of those health insurance policies that feels like it's written in a totally different language. But what if I told you that buried in all that fine print are some really powerful rights, specifically designed to protect you? Well, today we're going to decode that document and show you exactly what they are.
It's a feeling we all know, right? You get this thick packet of paper, and it honestly seems designed to confuse you, not to clarify anything. But hidden in that legal jargon are some serious protections. So our goal today is simple. We're going to translate it all into plain English for you.
We're going to walk through this like you're a brand new policyholder. First up, we'll decode the basic rules. Then we'll cover the first steps when you sign up and what your rights are. After that, we'll get into covering your family, how to handle big job changes, and finally, we'll look at the rule book your insurer has to follow. Let's jump right in.
Okay, let's start at square one. Before you even think about filing a claim, it's so important to understand what your policy actually is and, just as important, what it isn't. This first one is a biggie, the entire contract rule. Think of it like this. There are no secret clauses or verbal promises that can be used against you. Everything, the policy itself, your application, any add-ons or endorsements, it all has to be in the written document you're holding. If an insurer wants to change something, it's not official until it's in writing and attached to your policy. Bottom line, what you see is what you get.
All right, let's dive into the moment you actually purchase a policy. You might think you're locked in the second you sign on the dotted line, but you're not. New York law gives you some really powerful rights right from the get-go. You know that feeling? You sign up for something big, and immediately that little voice in your head starts asking, uh-oh, did I make the right choice? Well, when it comes to health insurance, there's a safety net built right in for that exact feeling. Remember this number, 10. You have a minimum of 10 days, it's called a free look period, to review your entire policy. If you don't like what you see or you just change your mind, you can cancel and get a full refund. No hoops to jump through, no questions asked. And that's not all. The state actually gives you even more time if your policy was sold to you by mail. This extends your review period all the way to 30 days. Which makes sense, right? It recognizes you need that extra time to actually get the paperwork and go through it all carefully. Now, this slide shows something that's super important if you're ever switching plans. The insurance producer, that's the agent or broker, has a legal duty to you. They have to compare your old plan to the new one, and here's the key part, they must explicitly warn you if a pre-existing condition that was covered before won't be covered by the new one. This is all about preventing those awful gotcha moments down the line. So, you've got a policy, you're past the free look period, you're happy with it. Now we get to the real meat and potatoes. What are the rules for actually using it and keeping it active? Let's talk claims and payments. When it comes to filing a claim, the clock is ticking for both of you, and these deadlines are serious. First, you have 20 days to notify your insurer about a claim. Then, the ball is in their court. They have 15 days to get you the right forms. You get 90 days to submit all your proof, and once they get it, bam, they have to pay up immediately. It's a two-way street, and missing these deadlines can put a whole claim at risk.
Look, life happens, and sometimes a payment deadline gets missed. That's exactly what a grace period is for. It's your safety net. As you can see, the length of that safety net really depends on how often you pay. If you're on a weekly plan, you get at least 7 days. Monthly, it's 10 days. And for everything else, like a quarterly plan, you get 31 days. It is absolutely crucial to know which one applies to you so your policy doesn't lapse when you least expect it.
This next one is a huge protection for you. It's called the contestability period, and it's basically a 2-year rule. Let's say when you signed up, you made an honest mistake on your application. Well, after your policy has been active for 2 years, the insurer can't cancel it or deny a claim based on that innocent mistake. The only exception is if you committed actual intentional fraud. This is a powerful shield against losing your coverage years later over a simple error. Okay, let's talk about something that's on a lot of people's minds. Making sure your loved ones are covered. New York has very specific laws about who can be on your plan and what absolutely must be included. Here is a number that is a lifeline for so many families, 26. In New York, your kids can stay on your group health plan all the way up to their 26th birthday. It's that critical coverage bridge while they finish up school, start their careers, and get their own financial footing. But it's so much more than just an age limit. The law gets really specific to protect families in all sorts of situations. For instance, newborns, they're covered from the moment of birth.
Adopted children get the exact same coverage as any other dependent. And for handicapped children who can't support themselves, there is no age limit for their coverage. The law also mandates specific benefits, like mental health coverage under something called Timothy's Law, and even infertility treatments, making sure plans are truly comprehensive.
Life throws curveballs, right? And leaving a job can be incredibly stressful. The absolute last thing you need to worry about is losing your health coverage. So let's look at the rules designed to be your safety net during these tough times. You've probably heard the term COBRA thrown around. Let's demystify it. Here's how it works. First, your old employer has to tell you about this right. Then, you've got a 60-day window to sign up. Now, here's the catch. It can be pricey. You have to pay the entire premium, including the part your employer used to cover. But, and this is a big but, it guarantees you can stay insured for up to 36 months while you figure out your next move. That is a huge benefit if you're in the middle of treatment and need to keep your specific doctors. But wait, COBRA isn't your only move. You also have something called a conversion privilege. So what's the real difference? Well, COBRA continues your old group plan. A conversion, on the other hand, lets you switch to a brand new individual policy with that same insurer. The great thing about both, they can't turn you down because of your health. But the timelines and costs are different, so you've really got to weigh which one makes the most sense for you.
Okay, so up until now, we've been talking all about your rights as a policyholder. For this last section, let's flip the script. Let's look at the rule book that the insurance companies themselves have to play by. These are the rules that hold them accountable and keep the system fair. This one is a cornerstone of New York health insurance. It's called community rating, and it basically means an insurer can't look at you, see you're older or have a health issue, and decide to charge you more than your younger, healthier neighbor. Everyone in the same geographic community pays the same rate for the same plan, period. It's a fundamental rule to prevent discrimination.
And the law gets really granular about marketing, too. It cracks down hard on deceptive ads. Insurers are flat out forbidden from taking a policy limitation, like a waiting period, and trying to spin it in an ad like it's some kind of perk or benefit builder. It ensures advertising has to be straightforward so you know exactly what you're buying. So when you put it all together, what does it all mean? It means these aren't just a bunch of boring rules. From that 10-day free look period all the way to community rating, they form an essential safety net. They're all designed to level the playing field to protect you from financial hardship and to make sure the system is fair and transparent for every single New Yorker. Understanding these rules is your first and most powerful step to becoming an empowered healthcare consumer. So I'll leave you with this question. Now that you know all these rights exist, what's the one rule you'll remember the next time you have to review your own policy?